Welcome to The Real Tea. I'm your host, Tammy Murphy, broker-owner of RH2L, bringing Miami Valley real homes to love.
And I'm Ellie Sollenberger to give my perspective as a home buyer.
We're going to give you the key to Miami Valley real estate.
Okay. All right, today we have Andy Heck with M&M Title with us today. So as a buyer, I don't feel like buyers necessarily pick their title company and don't really know what title does. They just know that at the end of the closing, that happens at the title company and you get the keys and you give them money. So Can you kind of explain what you do?
Yeah, happy to. So first of all, the first thing you said is when buyers don't pick title companies, just to throw it out there, buyers have the absolute right in our market to choose the title company to handle the closing, to handle issuing the title insurance policy. So in our market, Southwest Ohio, buyers do direct which title company to pick. Now,
potentially. Potentially, because it could be the lender who has an arrangement already with a title company, and so the lender does it. But a lot of times it's the realtor who's working with the buyer who's writing the contract where they write that in there. So if the buyer and the realtor don't have a conversation, it doesn't feel like the buyer is directing where that's going. The realtor may put a title company there because they know a relationship or recommend them, right?
Yeah, that's what I've found in my experience is I pick the realtor because I've seen your social media or I have a relationship with you, but it's not like you have a relationship with a title company most times.
You're kind of rare in that you are really informed and know people in and out of all of the different types of businesses. But technically, correct me if I'm wrong, Andy, isn't it who pays for the owner's policy as to who gets to select the title company?
Like in Columbus and other parts of Ohio, where Columbus, just as an example because it's closer, sellers pay title, and usually it's done about the time you put the house on the market and you list it. They usually run title at that point. Sellers do pay though, so they get to one pick in Columbus. But that's why I said, in Southwest Ohio, in our market,
and it depends again because I just had a deal, which is going to be a lot of. I might have to take my jacket off. It's a hot situation. I'm going to tell you, sadly, we didn't use somebody that we knew to go with this. But the buyer's agent picked the title company. They put it in there. Thought maybe it was driven by the lender in this situation because it's not the typical title company that brokerage uses. Okay, so when people have all of this stuff going on, it's a lot that goes into it. And ultimately, that title company dropped the ball. Well, I represented the seller, and the seller, of course, was paying the title insurance. And so we were going to pick this up and take it to another title company and got some pushback. So this is one of those things that as the consumer, you need to know what your rights are as the client involved in the transaction. If your agent isn't relaying to you or answering those questions, that you have some information to at least to be able to go back to. So because the seller was paying that, we had the right, when we got that pushback, I'm like, no, wait a minute. Actually, it's who pays this that gets to dictate that. So you had the opportunity, we didn't have a problem with it, but your title company failed, right? And so now we get to come in and we're going to say we're going to do this. And so we were able to help that. It really needs to come down to who is going to do the job and do the work for the clients. And there's two sides to the transaction, so you need it to work together. But title is very important.
Yeah, well, so to your point, Ellie, I think what you meant when you said, buyers don't pick, and we kind of went down a road here.
Yeah.
I wanted to just say that from a technical matter of fact, but what you meant was the normal everyday buyer doesn't have that relationship with the title company. Say, I want them, they're going to handle my closing.
Right.
You just don't hear that ever, do you?
Right.
Right.
Rarely.
So buyers do rely on their agent and say, who do you work with? Or maybe you have a preferred title company and maybe you have a marketing with them and you have maybe their flyers, maybe you have a sign on the wall in the conference room of a closing room, and you say, we work with so-and-so title company, and 9 times out of 10, the buyer's gonna say, okay,
Right.
Sounds good. Let's use them.
Right.
So I think that's what you're kind of going to.
That's exactly what
and they make the decision because the buyer doesn't have any idea really what
is
that
going on
means.
with it. Right.
Okay, so can I jump in? And,
Tell us
what we
about.
do? Okay, so
tell us about what you do, because you are important.
Yeah. So thank you. So we do two things. As a title company, we do two things, two functions. We have the title function and the escrow function, the closing function. Escrow and closing I'll use meaning the same thing. Title function means we search the public record, we figure out if there's any defects, any issues with the title, what needs to be resolved or cleared. Is it an issue that we can insure through? Is it not something that has to be resolved before closing? So that's the title side of it. The other function that we
Is that what you mean when you say you run title?
Run title.
Okay.
Yeah, exactly. Title examination, title search. We will search a run title, all the same thing. Exactly. Okay. The escrow / closing function of the title company is what the consumers see. Is at the table, finally we made it, we're sitting down, and maybe it's a seller pre-sign or different times, or maybe everyone's together and we're pushing papers and we're going through the stack of 160 pages of a loan packet or a nice maybe 8-page cash deal, which would be nice. Yeah. So what the consumer sees is the closing escrow function. What they don't see is the title function. The title function meaning our abstractor, the abstractor is a title examiner, going to the county auditor's office, county recorder's office, the county treasurer's office, going to the different applicable courts to see if are there any judgments, certified judgment liens affecting the property against a individual with the same name, a similar name. And we can talk about those, the not me affidavits that I'm sure you're very aware of.
Right?
And then if it's an entity, if the seller or the buyer is an entity, an LLC, a corporation, we're checking the Secretary of State website. These are all the things where an issue with the title could be affected in one of these publicly recorded offices.
Or if it's an estate.
Exactly.
Because you've got a trustee, you've got somebody who's passed away.
Exactly.
You have marital rights that maybe weren't figured out, and you've got all of this stuff. I mean, there's all kinds of reasons why you earn that, right?
Exactly. Lots of things. And
so when you say you go to those offices, is this all online or are you physically going there?
Most counties are online now. Okay. Some counties you still have to physically go to, or it depends how old the thing we need to search is. A lot of records that counties have image to the public record, like a website. You hop on Montgomery County website, the auditor's office, the recorder's office, and a lot of documents from, I forget the cutoff, in 80s,
like
70s
early,
maybe.
Yeah,
it's around that time. Yeah. But if we have a commercial transaction that we are running title for at least 60 years back, and in some cases 100 years back from right now, those aren't usually imaged on the public record. You might actually have to go to the county and pull out those dusty old books and actually look at the actual pages.
It's still legit, right?
Is there ever
it's still legit.
Time?
Yeah.
Is there ever so much time that passes that something is just invalid?
Ohio does have what's called the Ohio Marketable Title Act. And that will be a discussion which maybe if I come back as real estate law, we can get more into that.
Okay.
But typically, it is 40 years to the root of title. So you go back 40 years, you see who's in title at that time, 40 years ago, go back to when they took title, and that's going to be considered your root of title. And that's as a very just general standard, that's where we can usually start the search from. And that's for a normal residential transaction. Now, there's other title standards. If there's mortgages on the record of a prior owner, you can go back one or two mortgages, not do the full search, but that's a different topic about title standards and search parameters.
Okay.
Yeah.
So one of the big things that obviously gets talked about is that owner's title policy. And again, when you're writing a contract as a buyer, your agent is marking boxes on here for you, trying to negotiate the best terms for you. And that's one of the things that can be marked is that either you want it or you don't want it, or the seller is going to contribute a portion of that. Usually so the seller is going to cover maybe $300, right? Yeah. Which covers only a certain portion of it anymore. I mean, I don't think we have prices low enough to where that's all of it.
Yeah.
And so tell us the importance of an owner's title policy, because this is something that a lot of people are like, well, I can save the money, or I have 30 days before I have to really commit to it. So let me just negotiate and not do it now, and I'll take care of it later.
Yeah, and just before I forget, that 30-day that you talked about, because that's brought up a lot of times. You're at closing, the owner didn't want to pay the policy, the premium right away. They said, well, I have 30 days to get it. That's going to be to take advantage of that simultaneous discount rate if the lender bought a loan policy too. But I'll just say that if there's going to be a title claim, usually statistics will show that it's going to be a couple of days really after a transfer. And if you plan to wait, day 29 and then call the title company and say, I want to buy it now, something has already hit the record or been in effect. So
interesting.
A lot of times is if something's going to happen, it might happen more likely than not pretty quick after that transfer.
So that's interesting, because when we had John McManus in here, we were talking about deed scams and everything. So one of the things is when there's a change of ownership or a death, that might be the trigger for scammers, that they're seeing this activity. So you're saying as soon as a sale is recorded, it might be that it happens that quickly. If you didn't get that owner's policy through the closing process itself, you may have just opened the door for that. Wow.
And one thing about that too is once you're in title, and if someone tries to scam you out of title, your normal owner's policy does not cover you for that. So a standard insurance policy of an owner's title insurance protects you for losses and damages that arise in the future once you own title, for things that happened in the past. Once you take title, and if someone tries to defraud you and scam you out of your property, forge a signature and sell the property out from underneath you, a standard policy of title insurance does not protect you against that, because that is something that has not happened in the past before you took title. It happened once you already were in title.
Interesting. So is there a different policy for that then?
Yes.
Ah.
Yes, yeah. So it's called the enhanced policy of title insurance.
Okay.
In fact, in Columbus, I believe this is default. It's defaulted in the contract, in the Columbus contract, that the enhanced policy is what's purchased for the buyers. And it might be called something with different agencies. The enhanced policy, the different underwriters that we write policy for call it different things. The Eagle policy, the homeowner policy, but it provides 20 plus additional protections to the buyer. And a lot of those protections are post-closing. So fraud is one of those things. Not sure if John talked about it, but
no.
on the county,
We did.
On the county website.
FAN,
exactly.
Okay.
The fraud alert notification system. And that's a great thing to do. I think it's free. I'm pretty sure it's free.
Yes.
And I think
Is that just Montgomery County?
Well, he works for Montgomery County, but I think other counties are doing similar.
All the adjacent counties around Montgomery County, I believe, have a very similar program. Yeah. Warren County, Butler County, I think has it. Greene County, Miami County.
Yeah.
Don't hold me to it, but I'm pretty sure they all have something similar to it. But for Montgomery County, at least, I know they have the FAN system, right? And you can provide an email. So anytime that something is recorded on the public record affecting that property, you'll get an email about it. FAN is not an insurance policy, though. It's great that they let you know.
Right.
And you can, act fast, act now to stop bleeding, but it's not an insurance policy. The enhanced policy, and there's limitations to who can buy the enhanced policies based on the property. Usually it's for 1 to 4 family and for natural persons. So if a buyer is an entity like an LLC, a corporation, if it's a commercial property, the enhanced policy is not available.
Okay.
But for a lot of times, the residential purchases of just a normal person buying property, the enhanced is. And it defends you against if someone does try to deed the property out from you. It's a post-closing issue, but the insurance policy provides you the cost of defense, including the court costs, attorney fees, and all that, to defend against that.
I think that's helpful. So you mentioned that the Columbus contract is taking that into consideration. I know that our Dayton contract hasn't, so we're not seeing that. I just sat through a closing, so I know that there's a couple of things that get offered while you're at the closing table, right? And we'll talk about the other one in a little bit. But this is doesn't seem to be talked about. So is it another thing that the buyer or their agent really needs to know about, to ask about?
Call the title company. handling the transaction. If we are able to have the communication with our title company, we might be able to present it. And we have flyers about this too, and I'm happy to provide you guys with more information on this that you can distribute out to clients and your own agents. But it starts really with when you write the contract.
Right.
It starts, I think, with you as an agent with your clients and educating your agents and their clients that this is a product that's out there. It's been around, I think, over 20 years, actually, and it's just not known about in our market.
And the consumers having this information, what do I need to do to protect myself from? Because more people are having that experience, or they're seeing those news reports where people have had it.
Fraud is on the rise.
Yes,
fraud's on the rise, and that's not the only thing it protects you against. The enhanced policy also protects you against like permitting issues. Let's say you buy a property from someone that just flipped the property, or someone who has lived there forever and they just put a deck or a fence and they did it themselves and they didn't realize I have to pull a permit. A municipal permit, or have an inspection done and get signed off for it. The city might find out, or the village, or whichever municipal city or village or township might find out. They might come to that new buyer who now owns the property. They didn't put the fence in or the deck in. Their seller did maybe 5 months ago. But now they say, hey, that fence has got to go, or you got to pay for to pull permits now, something like that, because you have an improvement that's not permitted as of right now.
Wow.
So the enhanced policy actually provides coverage against that scenario.
So what's the basis on a price point for that?
15% in addition to the standard policy.
Okay.
Yeah. And then, as you know too, the policy premiums are filed rate. The state Department of Insurance, based on the contract price, so the gross sale price, determines exactly the dollar amount to the cent of how much your owner's policy is going to be. It's not negotiable. It is a filed rate by the state.
Right.
Yeah.
So nobody has any control over that.
Yeah, that's interesting. It's something I've never heard of.
What agencies do have control over are the discretionary fees, like the closing costs, maybe the title exam. But a lot of the competing title companies in our Dayton market and surrounding county market are all fairly competitive with one another.
Yeah, I mean, I can say that certainly having relationships and working with a number of the agencies that are out there, the title agencies themselves, that it's nominal if there's a change. It might be down to the attorney fee or something like that. But another issue might be if you are working with a title company out of our area, like from Cincinnati or Columbus. A lot of investors will use somebody like that. That's where a consumer already has a relationship that's established with a company, and so they're coming to us as the realtor to say, no, everything has to go through this title company. Well, it's not a title company that I know or have any experience with, or maybe I do, and maybe that makes me a little nervous because they're not in our area. So some of the things that they're used to doing or that they do isn't necessarily commonplace here. So that makes you uncomfortable to say, well, can't we use a local title company to say, help us out with this?
Yeah. You know, and this is off topic, but I'm going to talk about it anyway because taxpiration is so much fun.
Oh, right? There you go.
Yeah. And we deal with this because we have to create the settlement statement that shows what the taxpiration is. And so I like to bring you up to speed if you know what I'm talking about. In Ohio, we pay property taxes a full year in arrears. So when you pay your bill twice a year, is for the first and second half of last year. So when the seller sells, you give a credit to the buyer because they have to pay the next tax bill. But that tax bill is for a year ago when the seller owned the property.
Okay,
so
that makes sense.
You give a credit. Now,
is that all counties in Ohio?
That's all counties in all 88 counties in Ohio. Now, the one county that's different is Montgomery County.
Naturally.
Yeah. And we have a short proration system. So instead of compensating the buyer for the full number of days worth of property taxes that have accrued but not yet been billed, we shorten that from the day of the first day of the current tax cycle to the day of closing. In short, what that means is the buyer gets stuck paying 6 months worth of the seller's tax bill after the closing. Oh. But I can almost guarantee you that when that seller bought the property,
they did the same thing.
So when the buyer has to pay that tax bill, they're going to basically recoup that money when they sell the property, and they only give a short proration to their buyer.
Right.
Oh.
Rumor has it. Do you know what the rumor is of a short proration?
Mm-hmm.
Do you?
Yeah. Go ahead.
What is it? You told me. I'm on the spot. You're on the spot now.
Well, they've talked about that for a while, that they want to get rid of it. So
Yeah.
I don't know that Montgomery County is going to do that.
Well, proration is all custom. It's not. It's not law. It doesn't have to be that way. It is wholly negotiable in every transaction. But custom in Montgomery County is going to be short proration. The rumor of how it started was back in the flood of 1913.
It is.
I heard.
Yep.
Yep.
Oh.
Because all the records were lost, and so they just had to say, okay, well, we're going to do it like this. And it's from this day forward and forevermore.
Yeah. So now
That's
we're
so interesting.
111 years later, and
Still
Here we
dealing
are.
with it. And people are confused because most of the country, you're talking about our state, but even most of the country, everything's long proration. Nobody knows any different. What do you mean short proration? What do you mean I get to choose how much I want to give them as a credit? If you're an investor or a seasoned flipper, right? You buy and sell property a lot, then you learn long proration versus short proration, where you pick up the extra money, where you don't give it back, so you've actually made more net return.
Oh, I do remember hearing about this
Yes.
during my transaction.
so it's fun for you guys when you're on the forefront of the contract and you're checking the box and tax proration, short or long, and explaining to the client what that means. And then it's fun for us after you think that they understand it and they sign the contract, and then we send out the first settlement statement and they say, wait a minute, what's this credit I'm giving? And then we explain what it is.
And then even better, when the client walks away from the closing table and 6 months later, there's a tax bill and they're like, wait a minute, I didn't get paid for this. Why am I paying for their taxes? And they call up the title company or come storm in and say, what am I doing?
Storming with the bill and saying, so do you pay this for us? And, no, we do not pay your taxes.
That was that money credit on the paper that didn't come to you but did.
Okay. So
right.
back to when you were running title, about how long does that entire process take?
For a normal residential property, I want to say 5 to 7. Excuse me. I should have some water, I guess. Yeah. 5 to 7 days is the average, I would say. Maybe a little quicker, depending on the complexity of the title. If there's, how many issues. If it's a really common name, and Jonathan Smith, just total example. There's going to be lots of people with that name, and there could be lots of liens that pop up in the county with that name. It might take a little bit longer to sift through those, but the search itself should take, on average, I would say 5 to 7 days.
Okay.
Could be quicker.
So you see females that come in to the closing and they have this sheet of paper where they have to do a name affidavit, and there's like this list. I've seen them where there's 2 pages. It's like, oh, okay. It's not necessarily that they've had that many different names. There's just that many varieties. So when you spell your name a unique way, sometimes that'll get typed wrong into a system, and then it's a part of your record, right?
Yeah.
Or I'm sure like people that are juniors or seniors, is that kind of a nightmare for you guys if one person has bad credit and kids trying to buy?
The credit part isn't really our thing. If it's a finance deal, the lender's going to have to sift through the credit issues, really.
Oh, okay.
So, the only time that we see the name affidavit is on a finance deal where the lender wants the person to say, I am all these people. Or at least be notified that, hey, some creditor has reported to the credit bureau of your name spelled this way or misspelling this way, or
Okay, that makes sense.
Yeah.
So do you get to see what the liens are for, or you just know that this company has a lien?
We do. We see what they're, not exactly what they're for. We see who has the lien, who the lien is in favor of, what the amount is. If it's like state of Ohio tax, Department of Tax, we know obviously it's going to be a tax lien, and whether it's a use tax, an income tax, we can see that. Where I thought you were going with that, with the names, is the not me affidavits.
Right.
So if we have, let's say, a John Smith, and I hope no John Smith is listening to me, I guess, but I'm not picking on you.
Well, if you are, don't worry, it's not you. It's not personal.
Exactly. These are called general liens. When you run a name, a general lien is a lien against the person and any property owned by that person in the county it attaches to. So when we go to the clerk of courts and we run that person's name and we see is there any liens against a person, there's going to be countless against a John Smith. So we have to be able to clear that our property that we are issuing title on, that the buyer is buying, that the seller is selling, is not the same John Smith example that any of these liens are against. Not paying taxes. Maybe it was a lawsuit and there was a judgment of liability found against the person, and they certified that judgment as a lien on the record, and now that liability amount found in court is now a lien on the property. So unlike a mortgage or a mechanic's lien, which actually has a legal description attached to it, and you can specifically identify the property it attaches to, a lien like a judgment lien doesn't have a specific legal description to it. It attaches to the person and then any property that person owns in the county. So then we have to clear it by saying, okay, you have the same name or a similar name, but you're not the same person with those liens.
So do you just ask them?
It's an affidavit form at the closing table. They sign an affidavit with every lien, who it's in favor of, what the amount is, when it was filed, if it was ever renewed, and when the renewal was filed. And they're saying by affidavit, it's not them.
Oh.
Yeah.
So at
Or
least
have
that clear.
people try to get around that, and it really is them.
Not to my knowledge.
Okay.
It's probably not the thing that you would know. Like if somebody gives you a fake ID, you don't really know it's a fake ID.
True.
So we don't have to really watch
Unless
over.
it's a bad fake ID. Then. Yeah.
What else do you think the consumers need to know about title insurance specifically?
It's a one-time cost. I want to say
Okay.
that too. It's a one-time cost. Unlike auto insurance or home insurance, that you renew it on a yearly basis. Title insurance is a one-time cost. You pay it at the closing table most frequently. It's a filed rate. You pay it the one time. Just for purposes of example, on my filed rate with me. Average home price that you sell or have a client buy with you.
$258 right now is the average in the.
So for $258, the filed rate, the owner's policy premium is $1,340. $1,340 and 50 cents.
So in that case,
50 cents.
if the contract is written where the seller is only giving a $300 credit to the buyer, then the buyer is still paying over $1,000 for it. And so if it comes down to there's a dispute as to who gets to pick the title company, in that case, the buyer gets to pick them because they're paying the greater portion of the title cost, right?
Right.
But if your agent's really good and you can negotiate and you get to slip this through there that the seller is paying the whole cost of the title insurance, well, that's a $1,300 benefit to the buyer. And maybe it's not an issue as to what title company, but if it is, then it's potentially the seller gets to call who the title company is. Just as an example.
Yeah. And just going back to the cost, what I'm trying to say, it's a lot of bang for your buck. And you might say it's a one-time, $1,350. It sounds
To
like
protect
a lot.
your interest.
Protect your interest. You pay it one time.
How many times have you seen, how many times have you seen where a family member from a prior owner comes out and says, well, I didn't know that the house sold or they were married and I'm this high. Tell us some of those complicated issues that you've ever seen.
Yeah, this is one that I heard about. I wasn't involved with this one, but it was farmland in Ohio, and the owner of the farm passed away. He has several children, and one of the children was not included in the estate. And they distributed, they sold the farm, they liquidated the assets, they distributed to, let's just say, 4 of the 5, and they never included the 5th one in the estate. And they certified on the next of kin forms to the probate court that they're the only heirs, and they just left out.
Was this like
The
a black
5th one.
sheep of the family? Or like
Maybe it was. I mean, I would have
Disinherited?
to believe it was,
same
yeah.
dad to her mom?
Well, he found out later on. He found out that he never took what he was entitled to. And he had a claim. Now, then they sold to a developer, and they developed it. They sold each lot off to a builder. They built, they sold. And when that child found out, he had a legitimate claim as to the entire underlying land itself. Title claims affect the land itself.
Wow.
It doesn't affect the home. And people always say it's a new build, it's new construction, nothing wrong with it. It's brand. It was just built. There can be nothing wrong with it.
That's
Title
correct. They
claims
do say
run
that. Yeah.
with the land itself, not the improvement, not the house, the underlying land. So this child had a claim, even though houses were built on it, he had a claim on that entire land. And he went to every single person that had bought a house that was then built on that old farm. And he said, either pay out, or he had claims against them.
Wow.
Yeah. So everyone that had title insurance paid him out. Not for a penny more. They had nothing wrong with it, but everyone that didn't have it had to defend themselves against his legitimate claim.
Wow.
Were the siblings that left him off in trouble?
I'm sure that's a different issue.
Title company doesn't handle that one, right?
I didn't look into anything more about that. So anyway, it's a great cost, especially when you have a finance loan. The lender most likely is going to require a loan policy, which you are paying for as a cost of your loan. And if you buy an owner's policy, at the same time, you get the simultaneous discount rate. So the loan policy kicks down, the way it works out, to about to $100. You pay the full owner's policy, but instead of paying the full owner's and the full loan policy, you pay the full owner's and only $100 of your lender's policy.
So
there is a cost savings if you buy.
Is that part of closing costs?
It is.
Okay.
Yeah, and I think I've heard it said that, if it's important enough for the lender to require a title insurance to protect their asset, right? Then as a buyer, don't scrimp and think that this isn't important for you to have an owner's policy, because the lender's policy is going to protect the lender. And if you don't do the owner's policy, you have nothing there to protect you. And I think even more now, especially more that I hear about this enhanced policy, I think that's really something to talk about with people, especially with as much fraud Montgomery County especially has been experiencing, is certainly something to really talk about.
Yeah.
Thanks for talking about that.
Yeah, of course. The benefit of the title insurance also goes to your heirs. So if the property transfers down after you pass and you have an owner's policy and you're the insured, your heirs enjoy the benefit of the policy as well against any claims once they inherit the property. Again, there's no renewal fee, there's no additional cost. So it's just the longer time goes on, the more benefit you get for that one-time cost.
Wow.
Yeah.
So kind of switching gears to what the consumer sees as we go there for the closing, and I write you a check for $15,000. What do you do with it?
The check, there's a remittance to the underwriter, of course, and now as the agency, we make money off of the owner's policy as well. I mean, a title company really makes the most revenue from the owner policies of title insurance. Typically, owner policies are more expensive than a loan policy. So, but the title insurance premiums is where we really make the money. And just to run like any business, you have to make money. So,
right.
We keep a portion of it, but then we remit a portion of it to the actual underwriter. And what that means is there's a national. Now we write for four national companies, title insurance companies, and they're the ones. They are the deep pockets ensuring the financial loss. We're the agency. We are the appointed agents of these underwriters that we write the policy for and bind them to. But the money will be coming from those national. Again, ours are national. There's local ones and whatnot. But we write for national title insurance underwriters. So they deserve and are entitled to a payment of that premium as well. So, the policy, the premium money comes in, the check that you talked about. We remit part to our underwriters because they are the ones actually insuring it financially, and then we keep a portion of it as well.
Okay. So you're talking about when the buyer comes and they're doing their payout, right? And there's money, of course, that they're paying to the title company, your cash to close.
Yes.
So your funds, you've got the lender who's given funds to the title company. The title company is like this clearinghouse. You're taking all of this in, you're getting all this information, and then you're dispersing it the way that it needs to go.
That's right.
So that all the entities and all the hands that are involved in it are being taken care of. One source that's responsible for it, instead of saying, well, I want to buy my house from you, Mr. Seller, and you think that the seller is going to take care of all of these things and the buyer is going to take care of all these things. They're doing all of that for everybody. I think is the easier way to, so your money coming in is being put with all of the rest of the money, and then it's dispersed the way that it needs to go.
Right. And now we're segueing into the closing escrow side of a title company's function. Talked about the title, now we'll talk about the closing. And bringing the money in, we hold it in our escrow accounts. Our company, M&M Title, we are insured and we are bonded for holding the money in escrow. I think one of the insurance products you talked about was the closing protection coverage insurance, which I have to offer to you as an escrow agent. But again, we are insured and we are bonded. It's additional insurance, but
that's that funny thing, part of the conversation where you've already signed a half a dozen or 100 pages, right? And as the buyer, they say, okay, if you want to take this protection, it's like this X dollar amounts. I don't know. It's some nominal, right? $30 or what?
It's $40 for the buyer. Lenders usually buy it, so then it kicks down to $20 for the buyer if there's a lender that bought it too, but it's $55 for any seller.
So you get this sheet of paper and you're asked to mark yes or no, not do you like me, but yes or no, do you want this? And if you want to protect yourself from me as a company taking and embezzling this money, then you're going to give me more money. This crazy thing that the state did, after 20 years ago or something?
2007. The legislation was enacted in 2007.
And that money just goes into some reserve? No really account, nothing.
That money, it goes to the underwriter, whoever we wrote the policy on. So it's offered when there's an insurance policy being bought, a title insurance policy being bought. So the closing protection coverage money, it goes in full to the underwriter who's insuring that. So it doesn't just sit somewhere. It does go to the underwriter.
Okay, so we don't want to downplay it because it obviously had a role. Because way back when,
go
ahead and tell the people what happened way back when.
Well. Essentially, it was money coming in, loan money coming in, and then other loans to be paid off and liens released were not being paid off, and that money was sitting there and being used, and then they would call and they would say, we'll get right to it. We must not have sent that check off and got the lien released, and then they did it, and then things kind of snowballed over time, and there were buyers who were damaged because sellers' liens were not paid off, or mortgages secured by notes secured by mortgages. I won't get into that. I geeked out while I learned in law school.
Well, but it actually happened here in Ohio. So, I mean, this is something that physically people had information on or knowledge of, actually happening. And this is still in play, and it's one of those things that most people are like, well, do I need to do it? And people talk about, well, I'm not supposed to tell you. I can't tell you yes or no. Usually, if it's a company who's reputable, as you said, that's insured and in business, this is why those relationships are there, why people say refer somebody to a particular company, because I have confidence that M&M has been around and going to be around, and you're not running off with people's money. You're going to do the right job.
Exactly.
So maybe you don't have to get that protection, but it is offered as a result of that, right?
It is, exactly, yeah. So that law requires escrow agents. So we're at the closing, and we are an escrow agent. We have to offer it. But what I like to say is, it can be purchased. I offer the price of what it costs. Usually, most people, when they hear that I say we are already insured and we're bonded, a lot of times people feel confident with that alone, and then they dismiss this. But I do have people buy it sometimes. Certainly they do. I would say more decline it than buy it, but I can't say that no one ever buys it. People do.
Right.
People do.
Well, that's interesting.
Anyway,
So then what do you do with the huge piles of papers that come with a mortgage after we leave?
We scan them in for our records, and then we ship pursuant to the lender's instructions on where to send it to and how to send it back to them. But it all goes back to the mortgage company, to the lender. And what they do with it, I have no idea. We retain electronic copies. We don't have the hard copies of those. It goes back to the actual note holder and the mortgagee being the mortgage company.
Okay.
Yeah.
Well, thank you for coming and kind of enlightening us on what title is and what closing is.
Thank you for having me.
So we end every episode with some kind of tip for our listeners. So what is your tip being a title person?
My tip is saying if you're going to buy any property, whether it's vacant land, new build, existing home, what I say is, did you buy a policy of homeowner insurance? What if there's a fire in the future or a tornado in the future? Do you want to be insured? And they say, well, of course we do. Well, why would you not want to be insured for the largest asset that you're purchasing for most people in their whole lives with title insurance? It's a no-brainer to me. Yeah. It's a no-brainer to buy homeowner insurance, to buy auto insurance policies. It's a no-brainer to buy a title insurance policy as well.
Right. And that's something that they can look up, but obviously they could call your office. We'll put your contact information in the description below on the video.
Thank you.
But is there anything else you want to tell us about M&M Title? What stands out for you as a company? Because there are a number of title companies we know in our area.
Yeah.
So we have an idea.
So as I started off and jumped the gun, I guess, when we first started.
This I'm going to insert it in there.
Title company in Dayton, locally owned title company in Dayton. We are attorney-owned and attorney-run, owned by 2 attorneys. I'm an attorney as well with our title company. The benefit of that is, and you can attest to this too, that day before closing, you realize that seller can't sign. Seller's out of the country. Seller's not able to come. So we need a POA drafted up. Well, I mean, these are things that I've drafted at the closing table almost. We walk in for a seller pre-sign, and it's not who we thought was going to show up. It was a POA. And in fact, in this case, we actually were able to do a remote online notarization to get the actual person that needs to sign but wasn't there. We got them on, we got them notarized, we got the POA, so that the person who showed up was able to sign.
Oh, that's good.
So these are legal documents, powers of attorney or different memorandums of trust, or if husband and wife or 2 spouses were married and one passed away and now the survivor is now selling and there needs to be an affidavit to transfer the survivorship interest over. These are all things that we can do in-house, and we do in-house as part of the closing instead of having to farm it to an outside counsel. So there is benefit. And then, of course, at the closing table, we have multiple closers. Our 2 owners, Ann Taylor and Jeff Gamble, who are attorneys as well, myself, and then we have others, non-attorneys, but closers and different types of title agents. We all close. So you might have me, you might have Ann, you might have Jeff, you might have anyone else in the company closing. So there's a benefit to that because issues do come up.
Sure.
I'm sure you've been in closings with issues.
Absolutely,
and questions come up. And also when a buyer buys property at the end of the closing, they might ask about future questions. Maybe say, hey, for estate planning, is there a way that I can make sure this property I just bought avoids probate and goes to someone else? And that's something that an attorney being there can say, and I'm going to use this as a teaser for our next one. Yeah.
That means you're coming back?
Yeah, exactly.
Yay!
Yeah. But it's a benefit. It's a benefit. And that's something that M&M Title can offer, having it run by attorneys and operated by attorneys.
Nice. Very good.
That's awesome.
Thanks for coming out.
Thanks, guys. Yeah.
Thanks.
Thanks for joining us today on the Realty Podcast. If you enjoyed the knowledge and entertainment today, please subscribe and share with your friends. We will be embarking on a journey that bridges the gap between realtors and clients, uncovering the heart and tea of real estate.